Hello, and welcome to the Block Solid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, the technologists, and the entrepreneurs can benefit from it all. I'm Yael Tamar, co-CEO and co-founder of Solid Block, one of the pioneers in real estate tokenization, and I'd like to welcome Ami Ben David as my special guest on today's episode. Hey, Ami, how are you?
I'm very good, thank you.
Cool. So Ami is the co-founder and CEO of Ownera. He's an experienced entrepreneur, investor, and the creator of FinP2P, a platform developed to digitize, systematize, and automate private capital markets. Ami was an early pioneer, founder, builder, and investor in companies in the digital securities space, like Spice VC and Securitize. Actually, I think about Ami as one of the fathers of our industry and very grateful for him to pave the way for companies like Solid Block. He helped to drive the industry forward with vast and deep knowledge of the markets and tech and strong ties across the ecosystem. I presume that Ami is now using these ties to create something big and wonderful, and we're going to talk about Ownera in further detail. Is this accurate, more or less, Ami, or do you have something to add?
Yes, that's very accurate. Thank you.
Amazing. So where are you right now?
I'm based in London. The company is spread over the world. We have offices in Israel, in California as well.
Why did you pick London as your home base?
I moved to London, I think 17 years ago or 18 years ago. I had a company that most of the business was here and then ended up floating here. So I stayed with my family and here we are.
Got it. And which area of London do you live at?
I'm in West Hampstead.
Nice.
Very, very,
Yeah, to tell you the truth, I say nice. Yeah, that's basically like, I have no idea where that is.
It's a quiet residential part of London with a lot of Israelis and
that's awesome.
Nice part.
I mean, the only part, I usually, when I go to London to talk at conferences and stuff like that, I always stay by the park just so I can go running. So how far is it from the park?
Well, I have two parks not too far from me. So
okay.
Regent's Park and the Heath. So I'm good on that.
You're good on that. Okay, amazing. Okay, so tell us a bit about Ownera. What is your end goal and what are you guys involved with right now?
So the main goal for Ownera is to bring digital securities to the institutional market. I've seen early in my career in the space that a lot of the assets that are being brought to market are really suitable for, our private assets that are suitable for accredited investors, qualified investors. And some of the first things that I was involved with were targeting more kind of retail elements like, Reg CF, Reg A plus and things like that. And I felt that a lot, the market, the big market is institutional. That's where the serious money is. But what I could see was that a lot of the institutions were experimenting with digital, experimenting with blockchains, but not really deploying, or when they're deploying silos, platforms and venues that cannot connect to other platforms. So Ownera's mission is effectively to interconnect the market, to create one global market for private securities and basically digitize the private market.
Okay. And is there a demand for it right now from institutionals? Do you feel like you have to educate them about that they really need this in the future?
I'm getting inbound calls like all the time. And what I'm seeing is that actually talking, I think, to every institution, almost every institution, major institutions, mostly in the West, less so in Asia, but some big institutions in Asia as well. And I can tell you that all of them are looking at digitizing the private markets. And like we heard in the last Securities Token Summit last week from Hester Pierce, that she agrees as a regulator and the whole market thinks that private markets will be digital, completely digital in the end. There's just no other outcome that is logical. And the question is, how do we get there?
Absolutely. So give me an example of when you say institution, what do you mean by that? And by the way, Hester Pierce is a commissioner, right? Commissioner of the SEC, right? Which is the Security and Exchange Commission. All right. So when you say institution, give us an example of an institution and what sizes and...
the top world banks, investment banks, private banks, exchanges, the world's biggest asset managers, and so on.
Got it. And what are the main advantages for them to digitize the private market?
Private markets are significantly bigger than the public markets and growing faster.
Mm-hmm.
Specifically in real estate, it's like 30 or 40 times bigger, the private markets than the public market. So in real estate, it's a no-brainer. And everything is manual. So this manual kind of element creates, no liquidity, inefficient processes to raise capital. Once we digitize the market, there's a lot of revenues for those institutions to be making.
What kind of revenues? Like, what is the revenue stream for them? Is it upside? Is it fees?
It's everything. But I think I'll put it this way. If you're an institutional and you want to work on deals, major deals in the real estate market, today everything is manual and therefore it's not scalable. So you can only deal with the largest projects. You cannot touch the smaller projects because you don't have a revenue model for them. It's not worth it. It's like other private markets where, for example, the banks, these investment banks can only touch, $2 billion deals and above, and below that, they just don't have the scale. It just doesn't make sense. With digital, everything become automated.
Got it.
You generate revenues on the entire spectrum. And the market changes. Investors are used to be in a position where, they sit at home or at their offices and they made investments by calling people and so on. This is, people are we're in the era of Robin Hood.
Yeah.
People are expecting to be able to open their phone, see opportunities, click a button, and then the next day they don't like it anymore. They want to click the button again. So it's not about, and I'm saying it not because we are only interested in people that are investing like day traders, but there are multiple strategies for investments, but people expect access and they expect everything to be digital, everything to be convenient. And we see it across the banking world. And everything is going digital, especially after what we've had this year with Corona, where everybody got used to the fact that you need to be digital, you need to be working from home. So this is a big deal for the banks to be going into this market and digitizing it.
That's awesome.
It's really strategic.
Got it. And do you need blockchain to digitize?
I put it this way. You don't need blockchain, but blockchain has several advantages. The network that we've developed, and I'll talk about it in a minute, enables us to connect financial institutions to trade digital private assets between them. So theoretically, they don't need to sit on a blockchain. They can sit on a database. The advantages of putting them on a blockchain is that everything becomes more transparent. So when one bank deals with another bank, they don't necessarily have to trust them that something was done on somebody's computer. They can actually verify it cryptographically. And if an organization goes bankrupt, the data doesn't disappear, it stays. So that kind of level of transparency, immutability is something that only the blockchain delivers today.
Absolutely. And in terms of regulation, I'm guessing you're going to use Rule 144A for institutionals to trade?
In the US. In Europe, it's different, and every country is different. There are many rules, but what we're trying to establish also with regulators is that, we want regulations to improve, but we can already work with existing regulations because the reality is that we're replacing spreadsheets. And there's no way somebody can claim that doing something on a digital platform is any way worse than calling a lawyer and changing a line on a spreadsheet, which the lawyer has sole access to and can change the spreadsheet anytime they want it. So, what we're doing is much better than existing. Yeah.
Yeah. No, I love the premise. And do you have a calculation or like an estimation of this market that you guys are building?
It's hard to talk about numbers. So, and the reason that it's hard to talk about numbers is that when you ask people what is the size of the real estate market, you get varying assumptions. Everything from, $200 trillion to $900 trillion that I've heard from a person who's actually in the business and owns like a large portfolio of assets, and he thinks it's 900 trillion. So it's a huge market. And I would say that maybe 5% or 10% of it are public and the rest of it is completely private. So it's a huge, huge, huge market, specifically in real estate.
Uh-huh. But you guys are touching everything, right? You're focused.
Yes.
Okay.
Actually, we weren't planning to do real estate, but the network that we developed is agnostic to the type of asset that you put on it. It just manages ownership.
Mm-hmm.
And then when we opened it up and started asking projects to come on board, and we basically told people that we want projects of a certain size. So we're not suitable. Our network and institutions are not suitable to deal with smaller projects. Maybe, a few millions of dollars is too small for them.
Yeah.
But in the high tens of millions and above starts to be interesting.
Mm-hmm.
So at that level, we were approached by real estate companies that see the value and want to digitize.
That's awesome. Okay, so let's go back to kind of your story, because Ownera is fascinating for me, and I'm sure for many other people. Let's talk about Ami. Can you tell us about your journey to becoming one of the international pioneers of digitization of asset ownership, what you've done in your career that led you to that path, and how you realized that this is the future?
So I used to be an entrepreneur and also an investor for many years. I founded several companies, mostly in spaces that are completely unrelated to finance. So, mobile applications, games. I invented a search engine, which was a distributed search engine, and, I have patents in AI, things of that nature. And I only arrived to blockchain through a chance meeting that I had with a friend who is one of the leaders in the space. He was the inventor of a lot of the technologies in the market. And he talked to me and said, hey, you got to take a look at this blockchain thing.
Do you want to tell us who that was?
Well, his name is Brendan. Brendan Ike. He's the inventor of JavaScript.
Cool.
And he was doing the ICO for Brave, for BAT at the
Yeah.
time.
Oh, I love that.
It took $35 million in 24 seconds or something of that nature
Yep.
at the time. And Brendan is super credible. So you could see that the token, unlike 90%, 99% of ICOs that were garbage,
Yes.
this was real. So
Yes.
one of the very, very few ones that were building real ecosystems. And now the token is great and the application is great and they have a lot of users.
Yeah.
So he's a credible person to listen to advice from. But at the time we were working on a fund, and I was like, well, a fund cannot be an ICO because it's not a utility. It's definitely a security.
Yeah.
So that was the discussion. And that's what led to the creation of Spice was already there, but that was when we had the discussions internally and decided to go and tokenize. And practically what happened was that my CTO from a previous startup joined us, Shai, and together we designed the first platform to actually tokenize Spice itself. And then that was spun out and became Securitize. And I kind of cut my ties with Securitize, so I'm not involved with them in any way. And I went back to the fund, made a few investments. And then I left the fund to start Ownera because I felt that this whole industry was going towards retail, where I saw the potential in institutions, and I thought institutions need a network to interconnect them. And without that, I thought the market would never reach the size and scale that it can. So that's my journey. It's really, when we started, the way that I think about it is when we started, I was doing conferences like on and on while conferences were still allowed.
Yeah. I met you at a conference in Tel Aviv, remember? Yeah.
Yeah. So
one of the early crypto. Yeah.
Yeah. So I was going to crypto conferences and doing presentation about security tokens. And there were like 10 people in the audience and nobody would know what I was talking about. And it was quite, disheartening in the beginning, but then it started to be the kind of next big thing, and it didn't become the next big thing. And I felt it didn't become the next big thing because of these problems, because of there was no product market fit. It wasn't going to the right audience. It wasn't going to institutions. So what happened was that companies were tokenizing assets, and then the asset would say, can you distribute it for us? And the company would say, no, we can't because we're not a broker dealer and we're not even allowed to put it on our website. So it just was no product market fit at the time. So that was the point in time when I kind of completely separated from, the path from Securitize, from Spice VC, and started this journey at Ownera to make this happen.
That is really cool. So you saw the opportunity in the institutionals, and it's indeed most of the money in the world is being passed from one institution to the other. But I'm wondering how much of that will really trickle to retail and accredited, meaning that, yes, the institutions are the catalyst, but that might not be the only opportunity, right? There will be opportunities, but maybe later on for the other side of the market.
I think it will go down to the entire market. Definitely retail. The only question is what would come first and where's there going to be more money first. And I think that I'll put it this way. If you're an asset and you want to raise capital, if institutions can simply not invest in you, it's a non-starter. But if institutions can invest in you, and then you can do the regulatory requirements and meet the regulatory requirements to do retail, you can go retail as well. But so it goes from institution to retail, it can go, but it can't go from retail to institution.
Absolutely.
What I found was institutions actually tokenizing a fund, instead of becoming an advantage, became a liability because the institution didn't know how to hold those digital securities and so on. So, and I think that's what led to the slight disappointment from security tokens. But the way that I look at the NFTs as a parallel to what's going to happen with digital securities, because if you look at NFTs, non-fungible tokens, what we've seen lately with a single digital picture being sold for whatever, tens of millions of dollars.
Reminiscent of the 2017 ICOs, right? A little bit.
Yes, in a way. But kind of the model that I have is that the first NFTs were, maybe 3 or 4 years ago with crypto kitties and everybody said, oh, this is cool and so on. But then after crypto kitties, they completely disappeared for 3 years.
Yeah.
You didn't hear the word NFTs again because there were a lot of people building infrastructure and planning and waiting for the right time. But when it happens, it just happens in a boom. So I think digital revolutions are like that.
People went away and started building things, and then it takes time for the infrastructure to develop. Right now we have custodians, we have transfer agents, we have companies with licenses, and then we have Ownera to connect it all. Yeah. So I'm thinking about it also kind of, like when you're at a wedding and you have glasses that are stacked one on top of the other, and you have like one single glass up on top. And it's much more easier to pour in one glass and then it will trickle down instead of, having to pour 100 glasses all at the same time. And I also feel like the institutions are going to be kind of this top class, also because the institutions can bear to take a little bit more, they're investing bigger amounts and take a little bit more risk. And they have some funds designated to this. And then it will trickle down to accredited, smaller institutions, family offices, and then accredited, then retail. So one after the other. Okay, amazing. So I would love to learn your perspective on tokenization. You started in 2017. How did it change from then till now?
I think that the change that we've had is that we started thinking about the tokens as, similar to currency in a way, almost bearer instruments.
Mm-hmm.
Hold the token, I give you, you're the holder of the token, and the tokens can maybe move from, for one blockchain to the other and so on. So this is the way that crypto people think about tokens. But in reality, securities are different. Securities are basically just a registration of who the owner is, and they're not bearer instruments. If I give my tokens to you, it doesn't mean that you are the new owner now, because you may not be eligible to be the new owner or whatever other reasons that it doesn't happen. So there's a whole kind of, set of whitelists and blacklists and all sorts of solutions came. They are not really good solutions. They're just trying to take something that was built as a crypto and move it to be a security. And I think that what's changed now is that the platforms that are being built are natively digital securities oriented. It's designed for digital securities. It's built as digital securities. And that's what it's designed to do. And I think that's where the big change is. And that's also the change with regulators, because they have to worry less about things like, 50% attack and finality of settlement and things of that nature.
Yeah. So what do they worry about now?
The last thing I saw from the SEC was no action letter that they published where they allow broker-dealers to custody digital securities. But they only allowed it to special purpose broker-dealers who do not do regular. Then I think what they're afraid of is they're afraid of a leakage from this new environment to the big environment where, a lot of money is being handled before it is being actually proven.
Before it's meant to be a big enough industry, or?
That's one of the problems. They're trying to allow the market to experiment, but in a way that might actually stifle progress. So actually with GDF, we're submitting a comment letter that will ask the SEC to allow also, financial institutions to do this, as long as they, focus on private assets and accredited investors and be more cautious and so on. Financial institution can still do custody, but they have to do it with a third-party custodian.
Yeah.
These are technical details, but what they actually show is that the regulators understand that securities are going digital, period. Mm-hmm. And we've been working with some of the kind of leading financial institutions on Ownera, where it feels everybody understands it.
Yeah, but digital means blockchain, or maybe it doesn't. Is there a chance that they're thinking there could be another technology that will help make them digital?
Yes, I think that they're trying to stay away from the word blockchain and, talking about DLTs or ledgers and things of that nature. And there could be other ledgers that are not blockchain that achieve the same goal.
Mm-hmm. So I'd love to understand, what is your part in the ecosystem? Okay, you have this interoperability layer, but if there is, let's say, a fund, you said that you got a lot of phone calls from real estate assets or, asset owners of funds. When they call on you, do you do everything end to end, or do you work with industry operators like Solid Block or, Securitize, for example? What is your point? What is your part in the supply chain?
In some ways, we are the United Nations of the industry, or want to be. We're the interoperability layer. So we work with a lot of companies that are competitors to each other, that without having somebody in the middle would not be able to cooperate. So we're building shared rails for the industry. And for example, in the demo that we did for interoperability, there were 3 companies doing custody that compete with each other. And all 3 of them were showing how they can all play nice on the same platform, because otherwise each one of them has a smaller market. And in this way, they're all interconnected. And with Fireblocks, they brought their platform and, it has some features. And then GK came with something else and they have their market and so on. So that's where we are, in the middle. We don't work with all the companies in the market yet, but we work with a lot of them. And it's very easy to connect to FinP2P. So we brought Circle to connect to FinP2P for instant settlement. Mm-hmm. And it took about a week to connect Circle into the network. And after a week, we had a platform where you can pay for securities with USDC. Doesn't matter where you can be on Fabric, you can buy tokens on Corda and pay with USDC that are paid in Ethereum. And the whole thing happens in 3 seconds and it's atomic and it just works.
I love it.
So that's our position. Our position is to connect everybody together and be impartial in a way. Now, the reason that the organization come to me is that we're now at the second stage of the pilot. So the FinP2P was two stages. First stage was to prove interoperability technology. And I have to say, a lot of people did not believe that it's possible. When we had 30 kind of companies in the pilot, people say, oh, you cannot interconnect 30 companies. But luckily, we executed on this and it works. Now we are in the second part of the pilot. In the second part of the pilot is to take real assets and bring them to market with the financial institutions on the network. So for that, we are now in the lookout for assets that want to tokenize. So we're calling out the industry and saying, if you have an asset that is institutional grade, what is institutional grade? Something that, banks and big exchanges can distribute. At least $50 million of either primary issuance or liquidity, can go up to $150 or $200 million, like $5 million or $10 million deals, it's $50 million and above.
Yeah.
But if you have like a real estate project, commercial real estate project, $500 million, and you want to raise capital for it, this is exactly the type of assets that we're looking for.
Yeah. And what will you do with those assets? Let's say that we have a few of those at Solid Block.
What we do with them is we bring them to the network. We find one of the broker dealers, one of the banks in the network will basically front them or underwrite them into the network. And then we will make them available for investment through the platform. And then the different organizations within the network, different broker dealers and different exchanges can actually start to distribute and sell the asset to potential investors. So in fact, you're getting a distribution network. This is what it is.
Okay, very cool. So in terms of the tokenization of today on 2021, what do you think is the most crucial ingredient that is missing? Like you said, it will all come at a boom. Is that the interoperability? Is that the liquidity? Like, what is the most crucial ingredient?
We need a few high-profile, super successful test cases. I think that the technology is there. We have the interoperability technology, we have the tokenization technology, we have custody, we have settlement. All of it is there. What we need is we show, some massive assets, real estate, funds, companies that tokenize, growth companies that do digital securities. And I can talk about it in a minute, how they can do this. But once we show a few very successful cases where a company, a fund, and so on raised capital digitally, and was able to do it in much faster, at better prices, better distribution, enable liquidity, then all of these people standing on the sidelines and looking will jump in. I really think we're at the point where we have to really prove. We need this watershed moment.
Got it. And what about liquidity premium? Is it real? How much is it?
It depends on the market. I can give you an example of liquidity premium. Not in the real estate market, which is, I know your kind of focus, but if we talk for a minute about private companies, growth, there's a huge example of liquidity premium, and that's in the SPACs market. You see a market where tens of billions of dollars are being invested into vehicles that are effectively saying, we will find a company, a private company will invest in it. So what is it? This is liquidity looking for private assets. Looking for private assets so bad that they're willing to put the money into an unknown private asset. I don't care what, I trust this person in this SPAC to find a private company for me. I'm willing to pay for that. Okay. That's huge kind of indication of demand for me. So there's definitely liquidity premium because you see the prices that people are willing to pay. You see the commission that SPAC managers are being paid. Willing to pay them. So this is amazing to see. So there's definitely liquidity premium, which you can see with your own eyes.
Right. There's a lot more money right now, it seems like, than assets. Money is looking for assets that can make it even into more money. It's like, first, why is there so much liquidity floating around?
Well, you just need to look at the financial market. The Feds are printing dollars. The fixed income will get you 2% best case scenario if you invest in it. People are looking for growth opportunities. And in the growth opportunity, there's a lot of companies that are capitalizing on the digital transformation and growing. We used to have 4 years ago 130 unicorns in the world. That was 4 years ago. Right now, it's closer to 600 within 4 years. And the layer below them has expanded as well. Every other day you hear about another unicorn companies. It's not like the 2001 boom and bust, companies with no sales floating on in NASDAQ. These are companies, a lot of them are companies with real businesses, real growth. You just talked about one of the companies raising $130 million and, they're growing like it's amazing. So, and investors are sitting there and saying, well, what am I doing at my bank getting 0.3% on my money? It's crazy. That's where it's going.
I have a feeling that the reason the money is out there is because a lot of institutions and also, individual investors are no longer willing to put money in this fixed income, and the instruments don't give them anything. So the money is out there looking for higher yield products, and they don't mind the risk, seems like.
It is, but it's a problem. The problem is that you have more SPACs than quality assets to invest in, and too much money going into too few companies is never a good thing for the long run for the economy. So I'm expecting some backlash from it. There's going to be some great SPACs. I think eToro, for example, is a great SPAC.
Yeah.
Iron's another great SPAC. But when a SPAC goes to a B round company, right, and try to take them public because they're almost finished with a year and a half to sell the SPAC, that's never good business for anybody, by the way.
Yes, it sounds like the market is going, and it always goes into a direction, trying to explore new territory that maybe the product wasn't suitable for it. And same thing happened, with other products like the ICOs, and then, good product becomes bad, use case.
Yes. And one of the things we've done recently is we've developed a model for companies to raise capital through digital securities in the private market as an alternative to SPACs. We call this model the digital share class.
Yeah.
And what it allows a company, a private company, a growth private company, to issue another share class within their cap table. So you have common, you have preferred, and we're allowing them to issue a new share class, which we'll call digital share class. Digital share class is one line in your cap table that will say digital shares managed by insert bank name, okay, by a bank.
Yeah.
Okay. And so you only see one line. You don't know who the actual, or you don't care who the beneficiary is. They're managed by the bank as a broker dealer for you and on your behalf. And then those shares, you make them tradable. You remove the rights of first refusal, you remove voting rights and things like that, so they can just move between them. Yeah. In effect, what you're doing is you are IPOing of your company rather than a full. And what it allows you to do is it allows you to raise a lot of money with liquidity premium and a lot of kind of much better pricing that you might get from the VCs that, a small kind of amount of VCs that will maybe pay you a lower price, much closer to the SPAC prices, but real. And then you get liquidity as well in institutional market. And the key thing is you remain private. You don't have to go public. You don't have to start reporting quarterly. You don't have to spend all the money and efforts and resources. So you can continue to grow as a private company. So we're doing this share class in parallel. So we're inviting now companies to the pilot. We're invited companies that want to do digital share class. We're invited companies that want to do real estate. We're inviting funds. And that's kind of all gearing up towards the launch later in the year of the network itself.
That's cool. So you are talking about Ownera as rails for this multi-trillion-dollar market where, all of the different technologies and players are, kind of the train cars going over those rails. That's awesome. So I'm thinking, every time a train goes over rails, there is this digital imprint, otherwise known as data. So you guys are going to have a lot of data as a result of this network. I'm wondering if there is a monetization model for that, and how is that going to also streamline the industry?
I think data is super important. And actually, we want to focus on being the rails. So we're working with the companies that specialize in data analysis, in data management, in bringing the data to clients and customers. And effectively, we're saying you can connect to the rails, get permission from the banks that you work with to provide services to them, and then you can aggregate the data, and then you can add your own special sauce, like research on the companies from outside sources, and basically mix everything into something that is very, very useful. So definitely, if you look at the public market, there's a lot of companies are making a lot of money from, aggregating and creating information and so on. And I have no doubt that will happen on our rails as well.
Got it. That's great. So we talked about the digitization of ownership, about how blockchain is, the best, or at least the most effective, efficient technology to do the digitization, about the need for interconnectivity. I'm wondering about one last thing about the social impact of tokenization or digitization, how it's going to help millions of people or businesses to come back from, what we had now is a very difficult year. So can you talk a little bit about that?
Yeah, I think that digitization always democratizes access over time. That's a reality. I mean, the most simple example, when I was younger, and if I wanted to listen to music, if the record that I wanted to buy was not available in the little shop in Schenken Street in Tel Aviv that I went to buy records from, if it wasn't there, I couldn't effectively listen to it. Right now, I can open Spotify and I can listen to anything ever created ever. And I think that this type of digitization is what people are becoming kind of starting to expect, right? And you see it from the to the new crop of financial institutions understand it, understand this type of digitization. If I have, I wouldn't name them, I have an old bank application on my phone, and I have an app from Revolut, which is the new bank, and it's like night and day, right? The Revolut application is like amazing. It's, everything you want is in there, and they weave into it all the different services, and it's just beautiful. And with the other bank, I'm just, cutting my teeth to do a payment, and it's crazy. So this type of digitization is what the new type of users is expecting. Yeah, that's where the market is going, and it means democratization over time. There's no other way about it. But I think that what we need to be very careful along the way is to avoid the pitfalls of mass market, open, democratized tools. Like, for example, when you're dealing with securities, you have to be very wary. It's very easy to defraud people. It's very easy to dupe people to make investments that they shouldn't be making. So I think regulators have a role in protecting the market and making sure that it stays kind of real and successful. So I would not want to see a repeat of what we've seen on the ICOs market going in the security tokens or digital security space. I would not want that at all. I mean, I remember the days when I used to work, on Telegram, and I don't touch Telegram anymore because there was this guy person that basically imitated my profile, put my picture on it, and it looks exactly like mine, slightly different name, and started defrauding people, started sending them requests to send them Bitcoin.
Yeah.
So this is exactly the problem we're seeing with fake media and so on. So I think we're talking about money. We're talking about assets. We're talking about people's kind of life savings. These are, life and death things. If you need money for a medical emergency and somebody stole it, it's not a joke anymore. It's not a meme. So that's where I think that, progressing in a cautious manner is very, very important and even critical.
Got it. So as this podcast is coming to an end, and we talked about so many things, and you seem to be super busy, I'm wondering, if there's any life outside of work, if you have any hobbies.
I'm an entrepreneur. So an entrepreneurship is really a full-time job, pretty much. And also there's very little you can do in a pandemic where you're stuck at home. So I would say that the main thing that I focus on outside work is music. That's the key thing.
You play music?
Playing music, playing, creating.
What do you play? What kind of music you create?
It's not the stuff I'm not a professional at the level that I share anything. It's more for myself, for my own pleasure. So, I record stuff. It's very easy today to record. On the iPhone, there's an app that effectively you can mix whatever you want. It becomes so available.
Yeah.
It's much easier to do than it used to be. So that's something one can do at home, even by yourself, and mix 10 different, musical instruments into track.
Yeah.
That's a lot of fun.
Well, one day when, Ownera becomes so big, you can NFT those tracks.
Yes.
Okay. Awesome. What about the family? Who do you have living with you there in London?
I'm living with my wife and 2 children. And now schools are back and universities are back. So, everything is slowly coming back to normal.
That's hopefully. Awesome. As they say, inshallah, in the new markets that are opening up to Israel as of late. Any animals?
No animals here.
No animals.
I mean, we have a fox in my garden. We have a fox that basically made its home and comes in from time to time. We're not really friends. We just say hello sometimes.
That's cool. That's definitely very interesting. Where I live here in Tel Aviv, we have, what are those? They're not wolves or dogs. I forgot what they're called. They live in the park. They live here in the Central Park of Tel Aviv, and they come over, to say hi as well. So the backyard of Tel Aviv. Okay, Ami, well, it was really cool to talk to you today, and thanks for coming on. I learned a lot. I hope that our listeners learned a lot too. Thank you for joining the podcast. It was great. And you can find the podcast on Spotify, Apple Podcasts, or visiting our website at talblog.co/podcast. If you enjoyed the show, don't forget to rate and review, spread the word. Ami, good luck with everything at Ownera. I am waiting for this market to go to the moon, as they say in the Bitcoin industry, or more realistically, to start trading trillions of dollars.
Thank you for inviting me out.
Absolutely. Thanks. Have a good day.